Yuka Royer is here in studio. Welcome to the studio tonight. Yuka, you're starting with the EU. It's preparing to respond strongly to Donald Trump's latest tariff threats.
Well, Sharon, EU's trade chief Maros Sefcovic is in Washington for talks with the US officials, including the newly confirmed Commerce Secretary Howard Lutnick. His trip came just as the US president floated the idea of fresh tariffs of around 25% on imported cars, semiconductors and pharmaceutical products, with details due to be announced in early April. The latest threats come on top of a series of new tariffs already announced or imposed since he took office. Earlier this Wednesday, the EU Commissioner addressed an American business group, saying there's no justification for sudden unilateral tariff hikes by the United States, although he also said he was ready to discuss lowering the EU's tariffs on imported American cars as part of a potential deal. Let's listen to Maros Sefcovic.
If we will not be able to solve this situation, and if really we will be kind of hit hard arbitrarily without proper justification, so that's only natural that such a big trading bloc like us would react. We don't like it. I know that our businesses don't like it, so there is a pain on the both sides. So we'll do our utmost to avoid it, but if we cannot avoid it, we'll have to act in that regard.
Meanwhile, certain countries, Yuka, are particularly vulnerable to the proposed new tariffs. Germany, for example.
Germany, exactly. Industry lobbyists in Germany slammed the new announcement as a provocation that could increase prices for US consumers. Germany is among the countries that stand to lose the most from potential tariff hikes on cars, as they are the country's top export products, and the United States is their most important market, according to research by Oxford Economics released last month. The country's auto exports is projected to shrink by more than 7% if a 25% tariff were to be imposed. And that's because of its greater reliance on the US market, with a quarter of its car exports going outside of the EU, going to the United States, compared to just 5% of France's. It's not just for cars. Last year, the United States was Germany's biggest single trading partner, overtaking China, which had kept the top spot every year from 2016 to 2023. This was mainly due to the decrease in exports to China, which resulted in total bilateral trade declining by 3%. If you just look at exports, the US has been Germany's biggest destination since 2015. Its trade surplus with the US grew to 70 billion euros last year, with exports up 2% to 161 billion euros and imports down 3% to 91 billion euros, Sharon.
And how have the markets been responding to all of this?
Well, those 25% tariff threat weighed on European stock markets earlier today. London's FTSE 100 was off by 0.6%. As new data showed, inflation in the UK rose more than expected to a 10-month high of 3% in January. Paris fell 1.2% and Frankfurt down 1.8% on those tariff concerns. Car makers declined broadly. Germany's Volkswagen lost nearly 3%. France's Renault also dropped 2.4%. Wall Street's main indexes closed in positive territory, though, with the S&P 500 reaching another record high after subdued trading earlier in the day. The tech-heavy Nasdaq ended just above the flat line.
Finally then, to some tech news. Yuka, Apple has released a low-cost version of the iPhone.
After offering discounts in China on the existing lineup to boost sales, Apple has come out with a new budget model. Starting at $599 in the United States, the iPhone 16e is pricier than its previous entry-level phone, the SE, but it comes with artificial intelligence and the latest A80 microchip to power it. It also has a longer-lasting battery and a better camera. It's also the first to have the C1 chip, Apple's own modem for cellular communications. The tech giant has been slower than rivals like Huawei and Samsung to roll out AI tools on its devices, and sales dropped last quarter.